So all week, KCAL is diving into the insurance industry and all the challenges you may be facing. And this morning, one of the largest insurers in the state is speaking with KCAL News about the future of the market right here in California.
That's right. Mercury Insurance is also addressing whether it has enough funds to cover claims from the Palisades and Eaton fires. On your side's Christine Lazar caught up with the company's CEO for a one-on-one interview.
This is the first time since January's devastating fires that any head of an insurance company has gone on camera with us to answer some tough questions like what will happen to rates and will they continue to write policies here in California?
Are you committed as a CEO to not only staying in California, but committing to continue to write policies in Los Angeles?
The CEO of Mercury Insurance, Gabriel Tirador, joined State Insurance Commissioner Ricardo Lara at the Global Sustainable Insurance Summit in Long Beach and told the crowd that Mercury is committed to doing business in Southern California.
We want to do it prudently, but yes, we want to grow in our market. We want to grow both homeowners and auto in California. Mercury
is the third largest insurer writing homeowners policies in the state.
80% of our business is in California. We were founded in California back in 1962. We're not going anywhere.
But will that coverage be affordable? Mercury recently had a 12% rate hike approved by the Department of Insurance. And in July, Mercury's own reinsurance, which is an insurance company's way of transferring some of its risk to another insurer, is up for renewal. If those rates go up, Tirador says the costs will be passed along to consumers.
The higher cost that we have has to be passed on at some point. So what's really important, though, is the risk mitigation. The more that homeowners can mitigate their risk, harden their homes, the more discounts that we can provide them.
Mercury currently has a filing pending with the Department of Insurance that has discounts in place for home hardening.
That filing is actually what we call revenue neutral, which means some rates go up, some rates go down.
Tirador says he understands Californians' frustration with rising insurance rates, but he also says they have a responsibility to make their homes more fire resistant.
There are folks that think that they live 2 miles down from the wildland area and they're not exposed, but look what just happened in Altadena. So it's really about trying to mitigate risk so that the prices ultimately can come down so that insurance can become more affordable.
Consumer advocates have accused the insurance industry of fleecing customers and mismanaging their finances. But Tirador says that's simply not true.
The gross losses for Mercury from these January wildfires are $2.15 billion. Our capital was about $2 billion. Now, luckily, we have a lot of reinsurance, right? We buy our own insurance, but we try to price our product really only to make 4%. And we have not made money in homeowners for, quite some time.
Earlier this year, Mercury became the first major insurer to start writing policies in Paradise in Northern California, which was decimated by the Camp Fire in 2018. Christine Lazar, KCAL News.
All right, thank you, Christine. And again, we're taking an in-depth look at the insurance crisis all week. Tomorrow, Christine will host a live phone bank, and we'll be ready to take your calls and questions. And then on Thursday night, we have a town hall. We'll take your questions directly to insurance leaders and homeowner advocates. That's all this week on KCAL News.